Alright, today's video is going to be about a company I was looking into called SigmaTron International. I actually found this on one of the macro trend research videos. I bought a couple shares, but I didn't really look too far into the company or examine the financials too closely. So I just wanted to go ahead and brush back up on this one. This company is a semiconductor circuit board company, and I was noticing their increase in revenue going back to October 2020 here. You can see their revenue and keep an eye on the net income as well, but you can see quarter over quarter they significantly improved their revenues, and these last 2 quarters they've been increasing their net income as well. And what I found interesting is here you have their revenue for last quarter, 85.74 million, and their market cap is only 42.85 million. So what we do is let's go back to the earnings. So this is just a quarter, right? So 85.74 million. Let's assume that they stay there, or you could take the other quarter and average out to 70 million times 4, because it's every quarter. They're making $280 million a year, yet their market cap is only 42.85 million. And their net income here is 8.8 million. Here is 1.57 million. If you took somewhat of an average, I don't know if that's too sustainable. 8 million a year. And usually people multiply it by 10 to see what the fair value is, which would give us about 80 million, assuming that they can profit 2 million a quarter. So this kind of suggests that the stock is undervalued, and I mean we can even see here the PE ratio is 3.88. And I want to head over to macro trends to take a look at a couple of their key metrics. So here's the revenue, and we can see that ever since 2009, 2008, so right after the financial crash, you've seen that their revenue generally is trending upwards. Their net income, though, they have some negative quarters in there, flat quarters. So whether that's, who knows what that could be due to. We could take a look specifically. Let me go to the price ratios. PE ratio says right now that the PE ratio is 4. Looks like 4. And the price to sales ratio currently is 0.15. And I've said in prior videos that a PS ratio of 1 is desirable. Anything below that is considered undervalued, and anything above that is considered overvalued. But you can see that their price to sales ratio never gets above a 0.3, a 30 cents price to sales ratio, which the price to sales ratio, if you have a company that is not profitable, meaning that their PE ratio is going to be 0 or NA, then the PS ratio pretty much becomes the default metric that people use to value the company. And a PS ratio of about 1 is considered average or good. So their PS ratio being this low does suggest that the company is undervalued. Mix that with the PE ratio of a 4. And then we click over to the financials and go to the quarterly. And we can see that it does look like the revenue has been higher, about the same as it is now in the past, but looks like they took a dip around 2020 or so. And now you see this quarter here, this latest quarter is pretty significant breakout. So I wanted to go to their reports. I want to look at their 10Q. And I'm just typing into Google SigmaTron International Investor Relations. It's going to bring me to this page. Click on their 10Q, which is their form that they have to fill. They have to file with the SEC every quarter. And I'm just going to scroll down here, past all the disclaimers, past the index, current assets. I'm going to scroll past that. Look at the revenue. Okay, consolidation statements of operations. So net sales significantly higher here this quarter, and you can compare 3 months ended July 31st of this year to the prior year, and you can see the year-over-year increase. And revenues are definitely up, but so is the cost of products sold. So then you look at the gross profit, and it's more than double. But the gross profit doesn't mean much, because you can see here that last year they still were at a operating income loss. This year they had a $3.5 million operating income. And then there's this gain on extinguishment of long-term debt. I'm not really too sure what that means, but I'm seeing that their income here before the income tax expense, it has jumped from this $3 million number to this $9 million number. It looks like this difference, this $6.3 million, was more or less added to the $3.4 million number we see up here. And this net income loss is pretty much, this income here minus the income tax expense. So I'm wondering what this gain on extinguishment of long-term debt is. So I'm just going to highlight part of the statement there. I'm going to hit Control F to open up a search bar down here. Since I had it highlighted, it's automatically going to drop it in. And we're just going to look for an explanation. Not seeing the number we're looking for. Not seeing. Okay. No, that's not it. Yeah, here we go. So here it looks like it's getting into April 23rd, 2020. Company received a payment protection program loan. Let's see here. It was a loan forgiveness application. They filed March 2021. They filed a loan forgiveness application, and it was awarded July 9th, 2021. And it covers all principal and accrued interest. So they received the loan, they're supposed to pay it back, so they probably wrote that off on a prior statement, and they don't have to pay any of the principal or accrued interest back. So then they recalculated that into their profitability, and it showed that this quarter was much more profitable than it otherwise would have been. They had a net profit of $8.5 million, I believe it was, as opposed to $6 million less. Be somewhere between $2 and $3 million, which still would have been a gain quarter over quarter, but not as big of a gain. So the last quarter was $1.5 million. This one is showing 8.7, almost 8.8 million, but that should have been closer to 2 or 3. So definitely good to go back and look at the source for where all these numbers are being pulled from, because this quarter would have looked like an explosive quarter if you didn't have that context. So overall, it looks like the company's going in a good direction. I'd be interested in seeing the next quarterly result to see if this trend continues, but that's kind of the name of the game. It could reverse at any point. They do seem to be significantly undervalued, given that their revenue far exceeds their market cap. Just their 1 quarter revenue, 85 million, is almost double their market cap. So yeah, I mean, do with that what you want, but that's definitely not the norm for a lot of these companies. And then just to get a better feel for what the company actually does, we can go back to the investor relation page, and you can click on here we are at the investor relation page. You can scroll down to the annual report and open up the PDF. That's gonna take you to their presentation. And maybe don't use this for financial advice on the company, but you can use it to kind of get an understanding of what the company does, what they produce, maybe some of the companies they do business with. So here it says 54% of their business is welding equipment, gaming controls, smart grid, Internet of Things, connectivity, consumer side, automotive vision systems, appliances, white goods. I don't know what white goods are. And e-writers. Medical life sciences 5.2%, dental equipment, dialysis, operating tables, battery packs, and sterilizers. And just scrolling through, they're citing 5G supply chain demands, automotive market dominance, and a couple of issues that they're running into. And they'll touch on all of these different they kind of laid out quite a bit of different industries that they're a part of. They go into all the details here, and not seeing too many charts, easily digestible information. So if you do want to get a better idea of the company, definitely read into that. I'll definitely look into it a little bit in my off time. But just from what I've seen, I'll keep an eye on this company for sure. Any dips I see in the stock price, I will probably pick up a couple shares. There's not too much coverage. There's not too much analyst coverage on this company, and maybe someday I'll dive into them and do significant research to see where they are going in the future. But so far, it looks like they're headed in the right direction, and they're making quite a bit of money. It doesn't look like too many large money investors have gotten into this, especially being a small cap company. $42 million. That's anybody with money could easily double the stock price. So it just looks like this company's not on the radar yet. And if they keep increasing their net income and they keep increasing their revenue, then the investors will come eventually. And we'll see what happens to their operating expenses. If they can manage the operating expenses, increase the revenue, then they'll be on the right track. And I'd be interested to see what role they'll play in the chip shortage. So I'll keep an eye on this one, maybe make another video once I do more research into what the company itself is about. But just on a pure fundamental financial standpoint, they look like a pretty good buy, at least to me at the moment. Alright, I'll end it there.